Hey, what's up, guys? Welcome back. Today is December 5th, trading the QQQ, and then we have a special trade today, which was the WEED or the cannabis ETF. So, this is my second time recording this. The first one just went to rubbish for some reason, but let's get into it. So, the first trade, I just wanted to discuss how it was like bad fill on low liquidity. So when you look at this chart, you can see the candles aren't really well put together. That's because there's something called low liquidity, which means that not a lot of people are trading this ETF or this stock. So when you have low liquidity, you have like high spread, so you can only get filled at the price that somebody is willing to sell you at, right? So as you can see, and the time, so remember the time discrepancy here is that this is a day off, and then the time shown here are 5 hours ahead, right? So the first trade today on weed was actually, so today the cannabis stocks were all moving. So stocks like Tilray, Canopy Growth, Sundial, I'm not sure what other cannabis stocks they have out there. I know there's MJ as well as a ETF, and that's short for marijuana. So all of those tickers were moving today on some cannabis news. So I decided I would have played it on the share strategy, keep my risk low, and if it played out, it played out. But unfortunately, because of the low liquidity, I got a bad fill that immediately entered me into the negative. So you see, today I had a market open at, what's this, 9:43, and this is the 9 o'clock candle. You see, at no point was that ETF, the weed ETF, above 12 or even close to 12.29, but that's where it filled me at. The reason being is that somebody on the other side was only willing to sell me 50 shares at 12.29. So that's what happened today when I bought the 50 shares, and then I just sold immediately as soon as I realized I was in a loss there. So as soon as I opened the position, I sold the position when I realized how bad the spread was. Because as you can see, within the 20 seconds, I was only able to sell at market at 11:30. So there's a dollar difference between where you can buy and sell this ETF at. So just based on that, you immediately enter this trade with a loss. So I decided to close it out almost immediately, as you can see, 20 seconds later, because I would have to get double the movement just to enter into profit. I would go double to regain the loss, double to break even, double to get back to profit. So basically, it would just be too much for me to stay and hold into this trade. So you can see I entered at 12:29 and exited at 11:30 per se, right? Makes no sense. But then the second one, I tested it out again to see if that was what was really happening. So I entered with one share, and immediately I entered into a loss of, what's that, $2.49 within 10 seconds of entering the trade and exiting the trade. So I basically tested it out again and saw where just having low liquidity gave me exposure to a huge spread, which caused me to take a loss, caused me to take an unnecessary loss, right? So the second trade was the normal, the QQQ. And what I saw today was on the DXY, when we began moving today, this is basically the candle that I saw today. Like, we were rejecting right here, right? So while we were rejecting here, I was believing, okay, it seems like price had formed some level of rejection right here, and we would have continued back down. If we had continued back down on the dollar, that would have been quite bullish for the market, which is why I was bullish bias on this trade. So I was bullish bias with 60 shares of QQQ to the upside, and I entered at, what's that, 9:45 at a price of 29135. So you look for the 9 o'clock candle, and then I'll just find this exact price, and that would be where I had entered this trade to the upside. So 9 o'clock. So this is the 9 o'clock candle and 29135, right about there. Wow, that's the wrong line. I'll use a horizontal ray just to get it from that price only. So 29135 is right there, and I use purple for the entry. So I was expecting it to continue up today, and then I had a stop loss at 28990, and that was filled on the 10 o'clock candle. So 28990, so around 28990 is 2 down. 28990 would have been the exit. So 0.1 above there. Not gonna mess around with that. It's just 0.01 of price movement, which is neither here nor there. Pardon me. So I entered for the buys here and closed out the trade around there. So if you were to use the long tool, which is where I entered, and try to get a 2-to-1 risk reward, right? So you generally try to get your risk first, which is there, and then your target would be around 2. So you get your risk first, which is like the previous points that price wick down to, which would have been where you expect price to go down to if your trade was invalidated. So I had basically a 2-to-1 risk reward, and this is where price knocked me out on the next candle, which was the 10 o'clock candle. So as you can see on the dollar, on the 10 o'clock candle, it had a huge push up. From it has a huge push up, that's when I actually heard it on my earphones. I was like, okay, the dollar is moving high. I'm knocked out of my position. I don't even have to check the broker, because at this point I'm pretty sure I was out of the trade, and that I was. So noting from there, if I had gotten the right direction, which would have been a short position here, and then say I would take it down to, say I moved my stop loss to the previous high, and then I tried to get a 2-to-1 risk reward, which would have been around there, I would have been able to get a 2-to-1 risk reward trade. Perfect. It hit my take profit with a little more to run, but still I would have hit my take profit, been out of the trade, totally risk free, and that would have been a good trade. So what I'm noticing, I'm having a little trouble identifying the direction of the market on open, and I think once I work on that skill and build that skill a bit more, that will be me getting closer to my consistent profitability, which is what I'm working on, just trying to be consistently profitable, building a skill set that I can leverage the capital that I have at my disposal. So I have the capital that I can get access to, but I just need to build up the skill set. So I'm just working on building up the skill set. Once that is consistently profitable, I can take the capital and trade that. But for right now, I'm thinking I'm possibly going to lower the shares that I'm trading daily, so probably go down to 20 shares per trade and keep it at that. Try to fine tune the strategy a bit more, and once the strategy is a bit more fine tuned, I can increase the shares gradually, go from like 20 shares to 50 shares to 100 shares to 200 shares, and then I can move up to 1,000 shares. But I just want the strategy to be very consistent. I want that when I look at the dollar, look at the QQQ, I can just enter the trade, boom, get out at whatever time before market close, get out at a satisfactory level, in, out, make the trade, gone. So that's basically it. If you watch this to the end of this video, thank you for watching the video. You can please just like it and share it if you find any of it useful, because I'm trying to show you the transparency from non-profitable to profitable, while I build a strategy, while I take some losses, while I take the profits. So it's just the whole system of it. A lot of this people don't really show or try to show that side of trading, but the reality is everybody takes losses and it's just part of the journey. So I'm going to just document it day by day as I take the trades, as I fine tune the strategy, what I'm seeing, how I reacted when I saw it, all of that. So basically, that's all of that I'm trying to wrap into this channel. And that's basically it. So thank you guys. It's December 5th, and I'll see you tomorrow, December 6th. Bye bye.